All right, guys, welcome back. If you can hear me, let me know in the comments. And I'm super excited to be having this session with you guys right here. The first session we actually started got short, cut it because of the audio. And I am back with you guys. If you are joining here, um, and you can hear me loud and clear, please drop it in the comments. I've said many things before now, but I'm going to repeat them and be sure that everybody is following. So drop it in the comment where you're joining me from. We're going to have a very brief, a very brief analysis or post analysis or post trade analysis on this particular trade we took together with the community. Initially, I never expected the trade would work, but then it worked. Yeah. So you must always be ready to take trade um, that you are analyzing depending on the rules you have set for yourself. The moment it meets up or it meets the requirement for your trading rules, you just take it without hesitation. So quickly, you're super welcome. I can see people from Dubai, Botswana, Nigeria, UK, Zimbabwe, all over the world. You are joining this live session. I'm happy. It's a big honor to me to have you guys here. And one thing I will assure you guys is that I'll try my best to give you what works. I may not be your best mentor on the internet or um, your influencer on the internet, but I'll try my best to always bring the best your way. Anything that I am sure works, I will share with you guys. All right. Um, for those who have the privilege of having the secure seat or having the seats of mentorship under my community, definitely they have the first attention. Every time I am giving my attention, they are the first I give my attention to. And it doesn't cost you much to join them. It's just a payment of $100, and you're going to be in the community for 12 months. I think that is fair enough. Some of you will prefer to lose money in the markets before you join any mentorship. I am not saying that you must have a mentor to succeed. No, you can get access to detailed information on the internet, but then the time requirement for you to get the right thing is what differs from having a mentor that specifically points out where you need to put your steps on. So this particular trade on GBP USD, we took it yesterday after I shared the signal with the community guys I called on their attention. I know some of them were looking at it even before I shared it because of the mentorship they have gotten from me. And some of you that have been following my YouTube channel, I know you guys have been doing well in the markets. All right. So I trust your instinct that you know when to do the right thing and when to avoid the wrong thing. Trading is all about knowing when to do the right thing and also identifying where the wrong things are. If you can't see an opportunity, do not force an opportunity in the market. So this trade signal, let me quickly share with you right here so you'll see where I shared this particular trade opportunity. Entire screen. Let me go to, let's go entire screen, and then I will show you on beautiful. So look at this. The trade was shared right here yesterday. You can see it. It was a trade I was expecting that it would trade into this fair value gap here, but then I was doubting if it will reach here because of this bullish breaker that was found on the premium area of that particular price action. That was why I was expecting it to be a low probability trade because of that simple reason. But then it superseded my expectation and it worked perfectly. I'm going to show you what I did and the entry format I used for taking that trade so you can repeat it on your personal trading journey. Are you seeing my screen? If you are seeing my screen and my audio is clear, let's go into it. So first of all, what I did was to do my intermarket analysis. Intermarket analysis is simply you checking what asset is actually driving the foreign currencies, and it is the dollar, simply put, as DXY or the dollar index, right? Those of you who don't know what intermarket analysis is all about. Oh, somebody from Portugal, thank you for joining. Intermarket analysis is you looking at different assets that are either positively correlated or negatively correlated, and then find which of these asset is or which of the assets is the driver or the major focal point If it is going to show you the direction of where it is going, then you're going to find the direction of all the other assets. Like for the dollar paired currencies, I normally check the DXY. The DXY is simply the United States dollar index, all right? Is the indices that is responsible for giving you the exact detail and information of what is happening in the US economy. And it's as simple as that, all right? We're going to look at it from the daily time frame. On the daily time frame, I realized that the dollar is bearish. Why is it bearish? Because we had a shifting structure here. From this, we know that the dollar is bearish, trading back into rejection block here. This was a rejection block and price massively traded down into this area. And we have drawn liquidity on this side and on this side. That could be our next point of target. All right. So if I know the direction of the dollar, what does that mean? That means I can easily predict the direction of the foreign currencies. Just know it. If the dollar is down, foreign currencies will be up. All right. So it's as simple as that. After that, I simply moved to foreign currencies. I checked GBP USD, preferably. That was what I saw an opportunity on. So on GBP USD, I had the same price action. But then day before yesterday, I had an analysis with you guys on live session like that. Somebody called on my attention on whether it's time to go bullish on GBP USD when price was somewhere around here. Yes, I could remember. Price was somewhere around there. And I said you can consider going bullish on uh, this guy, that's GBP USD, when price has finally traded into this fair value gap. Why? If you look at the progression of price, this is what we call the smart money trap. Price traded back into the bullish or the block that was left untraded, and that is why you have to be very careful when you're taking trade. This is what we call the smart money trap. Look at how price never traded into this guy, and then price came back straight and hit it, went up, giving you the swing low entry format. The swing low entry format was this one, having 3 candle price action, with the middle candle having the lowest low, and then the third candle closing above the closing of the middle candle. I hope this long English is not creating confusion. I don't like to confuse anybody. So you need 1, 2, 3 candles. You want to see the third candle close above the middle candle, and then you take your trade from this guy. That is the entry format for this area. But that's not our lesson for today. Our lesson for today is this particular trade we took. Price traded into this point of interest. So what is your point of interest for? Your point of interest is simply for you to know when to do the entry. It's not the confirmation for the entry. It's when to do the entry, when to take your entry. Point of interest, please write it. When to take your entry is important for you. If price never trades into your point of interest, then you don't have any reason to take an entry. All right. Your point of interest is very important. And I feel price may most likely not trade more than here. We have a rejection block here again. All right. That area. So that was exactly what I saw when I dropped to the 15-minute time frame, being my entry time frame at any time, at any moment. I looked at this guy. Look carefully. You will realize that this is what touched our this is what this is what touched our point of interest, and this is the only thing we need. Clearing liquidity below, shifting structure. And this shifting structure is important because we want to see price establishing that movement. We have a bullish what? A bullish breaker. All right, bullish breaker block rightly seated at that point. Now, it may surprise you to know that taking the trade at this bullish breaker, you can take it, but then that means your stop loss is going to be here because it is still at the premium area of price. All these things still goes down to your risk management. If you can't afford to lose this money, do not take it from the premium point of interest or the premium institutional reference point. Wait for it to drop as low as uh to drop as low as coming down to the discount area. But then when I looked at the discount area, I couldn't find some kind of a reasonable area price could go to except this fair value gap, which price tapped into, except this fair value gap, which price just tapped into. And that was the reason why I was expecting to take the trade from there. But then because of this bullish breaker, I was thinking price may most likely not go there. That was why I call it the low probability trade. But then, oh, somebody caught the trade. It's a nice one. I'm happy that you did. All right. So when price came, now can anybody tell me what type of entry I used here? I used the swing low entry formation. All right, swing low. We have 1, 2, 3 candle. Look at the middle candle having the lowest low, which is this guy. All right, having the lowest low, and the last candle closing above the body. So that was the entry. It's as simple as that. This guy was the entry. If you look at this carefully, you'll realize that that was the exact entry I took, made it into the opposing draw on liquidity on the higher time frame. I just wanted you to see how the trade went. Now, many of the times, if I share my entry analysis of my trade analysis, it may surprise you to know that I think it's high time that we close this trade. Please, if you are there, you can close it. I will personally close my own from my mobile phone. It's high time you close that particular trade. Is not going to work as expected. I'm not sure it will reach that place, but at least cover your profit, right? Just cover it and let it run as it is running now. So close your entry if you are still on this trade since yesterday. So that was the trade we took into that guy, about 100 pips delivered for that. So this particular draw on liquidity is something I'm looking up to. All right, I don't want to target here and be too ambitious with that. So that was the trade. That was the trade. How many of you enjoyed that particular analysis I just did? You can see the time frame obviously on my chart. You don't need to ask me the time frame. You can see the time frame, so you don't need to ask me. Some of you prefer to be taught like somebody in elementary school. Please, you can see everything here. Is it that my screen is not clear? This is the 4-hour time frame. You can literally see it. 15-minute time frame was the time frame I did the entry. So looking at it from there, that was it. So today's trade, we are looking at this with the community, guys. For those of you who want to join the community, there is a link in the description of this video. You can check it. You can also send me message on WhatsApp and tell me your interest in joining. And then if you're finding it difficult to follow the link, I'll put you through what to do. All right. So the link is in the description of this video. You don't have to. You can get into a community of individuals that are doing well in this industry and are trading. I can assure you that you can have a nice environment with them. So look at this. We're looking at GBP JPY is what we're looking at together with the guys in the community. And I said something to them. I don't want to share much. All right. I don't want to share much, but then we're looking at this. There is a reason why I give it point of interest 1 and point of interest 2. And I told them the exact model or what to expect. If that happens, then the trade should be working. All right. If that happens, it's very simple, straightforward. If that happens, then the trade should be working. And that is what I expect them to do. So somebody is asking that I analyze gold. All right, let's look at gold. All right, let's look at gold. Gold is now pushing. This is still the fair value gap I want to see gold trade into, but traded into the concept. Let's see first. Let's see. I don't want to make assumptions. If we look at this guy, okay, that's not a bad place. That's a nice one. Let's see. It could be a sign for a bullish movement. Even this fair value gap can work. Yes, I expect it to work. I will have given you go ahead to go bullish now, but then it's not yet ready. It's not yet ready. It's not yet ready. I can see. No, it's not yet ready. Wait to see price close above this guy. If you shift structure here, it means it is ready. All right. If you have a shift in market structure bullish there. For now, for those of you who took it, maybe you can, if you're already in the trade, you can just uh, secure your entry. But as it is, it's not yet ready for me. It's still pushing uh, a bit lower. I don't want you to get stopped out before price finally moves. So it's important you pay attention to that. Always pay attention to the details that is required. It will save you from getting into trouble. Yes, I can tell you this. It will save you from getting into trouble. So that is the basic of this thing I am showing you without any manipulation. These are the things that happen in the market. Every time you come to the market, you expect to see these things happen. Yes, you expect to see these things happen repeatedly. Keep your analysis simple. Do it over and over and over again, and you will get it correctly. Gold is definitely going to go bullish. Yes, but getting the entry, you have to be careful with that as it is forming now. Uh, if we have had a low here, lower high, it will have given us a shifting structure here. I know some of you are looking at this guy as a shifting structure and a fair value gap for entry. No, that's too small of a data to call a shifting structure. No, it's risky. All right, it's very, very risky. Your stop loss is going to be here. Possibly, you may get stopped out if you're not careful with that. All right, you can make that mistake if you're just learning, but when you finally learn how to do the right thing, try and avoid it. Hmm? Is somebody learning something? Yes, yes. For those of you who have been reaching out to me to come to your locations and do seminars, I can come and do seminar, but the expense is going to be on you. You organize the seminar, you send me a detail of how the seminar is supposed to be, and I will avail myself. All right. I will avail myself. Even if it is outside Nigeria, I can come, just organize the seminar and call on me. I will be there. Hmm? So that is your goal. That is it for today, guys. If the third candle did not have wick, can we still consider it as a fair value gap? What do you mean? Yes. Yes, it is still a fair value gap. It doesn't have a wick. It doesn't have to have a wick. There are candles that will close without a wick. Yes, I know what you're saying. So if you have gotten knowledge in this session, you have learned something, I want you to drop it in the comments and also let me know uh, your location. Please don't forget, let me know your location. Bitcoin, that's all for today's analysis, and I will be ending the session right now. See you guys next time. Have a great day ahead. Bye-bye.